Investing in gold has been introduced in Kenya. Have you thought about it? Or have you even heard about it? Comment down below if you have ever heard of investment in gold. Hello, my name is Jessie, and on this channel we talk about finance, personal development, travel, and charity. And in today's episode, we're going to talk about the trends of this year and the upcoming year. By this year, I mean any other time of the year. Maybe you're watching this video in the middle of the year or whichever time. The first thing is the concept of emergency fund. Most people now have become conscious, especially after the COVID-19 experience. People used to think that everything can happen anytime, but right now, even money is a problem, as it happened during the COVID time, that sometimes you ended up having to use other modes of payment other than cash. The next thing is the cashless mode. People have now embraced mobile and online banking and other ways of making payment other than having cash, and this has actually improved even among different societies. People now know that you don't need cash to do all your transactions. In the older generation, most people thought that the only place you can get money is to your bank. Nowadays, you can even take a month without even going to the bank. Comment down below with the new modes of storing your money or managing your money that you have adopted. Which apps have you considered adopting in these times? The next thing is investments. People have decided to consider even the risky investments, unlike before when they were only focusing on the investments which are risk averse, and especially the stocks market, based on the fact that some of the stocks were stable during the COVID period. They are now more confident in doing more in the stocks line. The next thing was retirement. During the previous years, people have always felt like retirement is like so many years to come. Now they are more conscious and they are taking their time to consider saving for retirement as early as in your early 20s. The next thing is investing in gold. Have you considered investing in gold? Or should I ask, have you even thought or heard that you can invest in gold? For instance, in Kenya, only one financial institution offers the services. So if you consider investing in gold, you can always check which financial institutions offer the product and you see the benefits. The only thing about investing in gold, it's mostly a long-term investment, because by the time it appreciates and you get good returns, it might take some time. Comment down below with the investments ideas that you would share with us. Why not? We can also learn from you. The next thing is investing in assets which appreciate with time, and sometimes you need to consider these assets because you might get an asset which will give you returns in so many years such that it will not even be helpful, especially if you're looking to maximize on your returns within a reasonable time or within a shorter time. How have you considered spreading your asset risk? And which kind of assets have you considered investing in? Comment below. The next thing is investing in lump sum. If you get, for instance, when you get your bonus, you can put the money aside for your investment so that you're in a position to create more wealth and create returns from your lump sum. If you have not earned any returns, maybe it's time you check through your returns and how much your investment is giving you. When was the last time you reviewed how much your investments were giving you? Do you check the monthly statement that is sent to you just to assess how your money is growing, so that at the next point that you're thinking about growing your money, thinking of an investment, you know one of the best places you can get major returns? The next thing is managing your spending. What we have learned over the past, of course, if you're following us, is that you need to separate your needs and wants. And during especially the COVID period, that is the time you really learned a lot about knowing that how to deal with your necessities. And wants. When you look at your needs and your wants, you will be able to see where you can make a saving, especially as you approach maybe the festive seasons or the holiday seasons, or when the schools are closed and you end up spending so much. So when you separate, you'll be able to spend only from your wants, and you will be able to manage your income. The next thing is your credit card and your savings. You cannot align your savings if you're not aligning the same with your credit card. Your credit card is accruing interest which you need to pay. Your savings might be accruing less interest as compared to that. So you need to be able to know at what point are you going to balance between your savings and your credit card. So how do we suggest you balance? First, you need to ensure your credit card is paid on time. And if possible, you can stick to using your debit card. If you really have to use your credit card, ensure you don't accrue interest. And if you do, it's minimal. When it comes to your saving, of course, you have to set aside something for your savings. And every time you need to keep checking whether your savings are growing. And also, you need to ensure that you invest in somewhere you get some reasonable returns. You do not want savings which are stagnant, because that's just like putting your money under the mattress. Comment down below on whether you have taken control of your credit card and basically your debt, and also you have been able to manage to save something every month. The next thing is managing your debt. In our previous video, we talked about how interest rates have increased due to inflation, and this is something which is affecting your debt. Perhaps maybe in the last 6 months you have received 2 or 3 or even 4 letters from your bank or your financial institution advising you of an increase in the interest of your facilities with them, and perhaps even these facilities are not giving you returns. So the best thing to sort them out is to reduce the payment. If you're in a position to make regular lump sums, that is the best way you can help in your debt. And also, if you're in a position to maybe even pay off at some point within a shorter period, you'll save yourself some money. And if you're in a position to even save and do your investments from savings, even better, because you don't get to incur debt. Comment down below as to whether you're in control of your debt and what percentage of your income goes to debt. The next thing is taking insurance cover for your different aspects. Comment down below if you have considered taking insurance cover for different things. I don't want to say a specific, because perhaps the first thing, okay, to be honest, like for me, the first thing that comes to mind when you talk about insurance is either medical insurance, car insurance, and car insurance comes to mind because it's compulsory. The others, you make a choice and you decide whether you want to take the cover. So, what covers do you need in your life? You can visit your insurance expert, and of course my suggestion would be get someone who is honest, not the insurance agents who keep calling you and giving you ideas of the different products they have without explaining to you the full impact of that insurance cover. I got an insurance cover which at the beginning, whatever was explained to me and what I'm getting now, right now when the cover is in place, is totally different. And sometimes you feel like you're cheated. So I don't know, because this insurance story has always been a story ever since, that the brokers and the agents are very active in communicating about the different products, but they are not yet there in explaining the impact. Perhaps you can physically visit a certain insurance company and their offices would be able to give you a better position. Like in my case, the first time I had that experience, I went to the insurance company and inquired exactly what it entails. And I think what I got from them was more helpful than what the agent was giving me, because I realized there are agents who work in the company and they're like they're like brokers, not even brokers, they're like agents who are appointed to just bring business. They are not employed by the insurance company and they don't run their brokerage firms. The next thing is making risky decisions and risky and rational, such that by the time you're realizing you have made a bad decision, so to speak, you have already gotten yourself into trouble. If at some point, okay, basically what I'm saying is you need to think through, research, and if possible, engage an expert to be able to ascertain that you're making the right decision. So in a nutshell, here are the 12, or even you can add yours in the comment down below, things that you should consider as you're starting up. The concept of emergency saving has been more alive now, especially after COVID-19, because now people are more conscious about even their health, because that's one of their emergencies, and being able to meet their expenses. Keeping more cash at hand, because sometimes you may never know what can happen. I think we were a bit more prepared now, because previously you would know, I would wake up, go to the bank, do my things on a normal way and all that. But now you have to think twice before you do all those activities. Even if the COVID is gone, we are still being haunted by the effects. People are now more conscious about their retirement, so the saving on retirement has increased. And also, like we said in a previous video, employers have chipped in. So if you have a pension scheme in your office, you're able to get actually double, so you actually benefit more. So now more people are embracing, although in most organizations, if they have given you the option, then you have to be part of it. People are now embracing investing in stocks market, and they're engaging professionals to do the same. Unlike before, when people just maybe considered of just engaging in them without even doing proper research. The next thing is investing in appreciating assets. So ensure you have appreciating assets, and you can balance them with long, medium, and short term, so that you don't have all long-term asset investments and you don't get to even enjoy your money perhaps when you're even more energetic and you're finding yourself enjoying the money in your old age. People are now considering investing in gold. Like I said, right now, like in Kenya, you're able to invest in one of the financial institutions. If you know any other places, please comment down below so that we can also explore. The next thing is investing when you get lump sums, like when you get your bonus, when you get maybe some allowances, maybe some commission or something, you can invest there. Even your dividends, like now dividends would be coming up, that is a place to invest, and yeah, you grow your money. Thank you so much for watching this video. If you're new, kindly consider subscribing. If you're returning, thank you so much for always coming back to watch our videos. See you on our next one. Bye.